Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday the 14th of January in London. I'm Caroline Hepke.
And I'm Stephen Carroll. Coming up today, Bloomberg has learned that Donald Trump's economic team is considering a gradual ramp-up of trade tariffs.
The UK government is due to sell more bonds as Prime Minister Keir Starmer says his Chancellor is doing a fantastic job.
Plus, Chinese officials consider potentially selling TikTok's American arm to Elon Musk if it's banned in the United States.
Let's start with a roundup of our top stories.
Some of Donald Trump's economic team are considering a plan to increase trade tariffs month by month. Bloomberg has learned the discussions are looking at the incoming administration ratcheting up levies by about 2 to 5% each month. The uncertainty around Trump's trade plans has unsettled investors, with the S&P 500 nearly losing all gains since the US election and treasuries selling off. Goldman Sachs' chief economist Jan Hatzius says some form of tariff is now their baseline.
I think tariffs on China and probably on auto imports from Europe are probably coming. That is part of our baseline, and that is going to have an impact on inflation and on growth. Not a huge impact.
Goldman Sachs chief economist Jan Hatzius there. Sources told Bloomberg that Scott Bessent, Kevin Hassett and Stephen Mirren are working on the plan, but the gradual tariff hike proposal is in its early stages and has not yet been presented to Trump. A spokesman for Trump's transition team referred to the president-elect's previous public comments and social media posts about tariffs.
Here in the UK, the Chancellor Rachel Reeves is expected to face MPs today for the first time since Britain was rocked by market turbulence. It comes as the Prime Minister has been forced to defend her position. Bloomberg's Tiwa Adebayo has more.
Rachel Reeves' week of reckoning continues today as opposition parties get the chance to quiz her on rising gilt yields. The speech, officially about the Treasury chief's recent trip to China, coincides with the country's first bond sale since turmoil gripped the market last week. The billion-pound auction will be an important test of investor appetite after UK assets were hit the hardest amongst developed economies during the recent market sell-off. Despite growing pressure on Reeves, the Prime Minister has publicly defended her record.
Rachel Reeves is doing a fantastic job. She has my full confidence. She has the full confidence of the entire party. She was given an incredibly challenging task at the budget. We had a £20 billion black hole.
After she navigates today's probe in Parliament, Reeves must contend with the possibility of an inflation overshoot when figures are released on Wednesday. Economists have warned that numbers above expectations, combined with weaker than anticipated growth data on Thursday, could even force the Bank of England to intervene. In London, Tiwa Adebayo, Bloomberg Radio.
Chinese officials are discussing selling the US arm of TikTok to Elon Musk if the company gets banned in America. Bloomberg has learned that Beijing strongly prefers the short video app remaining under the ownership of parent ByteDance, but is debating contingency plans. Under one scenario, Musk's social media company X would take control of TikTok US and run the businesses jointly. The US Supreme Court signalled last week they're likely to uphold the ban in a coming ruling.
The European Union, meanwhile, is considering expanding its investigation into Elon Musk's X. The Commission's Executive Vice President, Henna Virkkunen, says that the upcoming German election has prompted concerns over the risks posed by the social media company.
When it comes to X, it means that it shouldn't boost, for example, certain content or favour certain political parties or opinions or candidates.
Virkkunen's department started an investigation into X just over a year ago. Scrutiny has ramped up as Musk, now a key US advisor, started endorsing far-right politicians such as the Alternative for Germany's Alice Weidel. Big tech bosses, in turn, are lobbying President-elect Trump to push back against EU regulation.
Extreme winds forecast across southern California could worsen wildfires, which are already some of the costliest in modern US history. Crews are struggling to contain the blazes that have paralysed Los Angeles nearly a week and killed at least 24 people. The estimated economic losses could be as high as $275 billion.
Donald Trump says he believes an Israel-Hamas ceasefire deal could come before his inauguration on Monday. The president-elect's comments come hours after President Joe Biden said both sides were on the brink of a proposal during an address at the US State Department. US National Security Advisor Jake Sullivan is also positive about the prospects for a deal.
I think the pressure is building for Hamas to come to yes. I think Israel also has achieved a huge amount of its military objectives in Gaza, and therefore they are in a position to be able to say yes. So there is a distinct possibility that we can get this deal done this week.
Jake Sullivan speaking there to Bloomberg Television. The agreement with Hamas would see the release of 33 hostages, some of whom may not be alive, in its first phase. That's according to senior Israeli officials. However, Jake Sullivan said that he wasn't ready to make any promises to get a deal that would end the fighting that began with Hamas's attack on Israel on the 7th of October 2023.
Those are your top stories on the markets. On Wall Street on Monday, stocks were mixed. The S&P 500 clawed back its earlier losses to finish up 0.2%. The Nasdaq finished down 0.3%. The Treasury market saw slight losses, yields higher across the curve by 1 to 2 basis points. And in trading today, the 10-year yield down 2 basis points to 4.76%. Gilt yields continued their rise ahead of the auction later today. 10-year yields 5 basis points higher and have now risen over 30 basis points so far this year. Oil prices rallied to the highest in 5 months. Today, Brent crude is trading slightly lower at $80.57 a barrel. In Asian trading today, Japanese shares returning after their market holiday. The Nikkei is down 1.8% in Tokyo. Japan's 40-year yield hitting its highest since its 2007 debut. European stock futures are pointing higher, up 0.8% for Euro Stoxx 50.
Those are the markets. In a moment, we are going to bring you more about what we have learned about the tariff plans being prepared by Donald Trump's team and how the markets have been reacting to that news. But before we get to that, another story that we've been reading about this morning. Spain's government wants to impose a 100% tax on non-EU residents who are buying property in the country. We've written a lot about how Spain and Portugal, in fact, have been trying to attract foreign investors. This looks like a total reversal.
Yeah, I mean, it's a move that could particularly affect buyers from the UK and from Latin America as well. British citizens are actually the biggest group of non-EU property buyers in Spain. Pedro Sanchez, the Prime Minister, said that in 2023, non-EU residents bought 27,000 homes and apartments in Spain that they didn't live in. His words are that they did it to speculate. So that's what this policy is trying to tackle. This is amid a housing shortage being experienced, of course, as we know, in many places across Europe at the moment. Spain has a severe shortage of new homes. The Bank of Spain estimates the country is going to need some 550,000 new residents to be built to meet demand over the next 2 years. So this is part of a broader package being announced to try and tackle a brewing housing crisis in Spain, including things like moving thousands of homes from the country's bad bank to a new housing agency as well. But could this be something that'll dent the economic growth in Spain, largely fuelled, of course, by immigration into the country?
Yeah, absolutely. It's a story that we've been that caught our attention on the Bloomberg terminal and on the website this morning. But of course, let's get into our top story now. Bloomberg reporting on how Donald Trump's top team are discussing a gradual ramp up of tariffs after he takes office. Bloomberg TV anchor Kriti Gupta joins us now to discuss what are the options that are being discussed and how would it actually work?
Well, this is, I think, a key way to get Donald Trump's tariff policy actually enacted without having to go through Congress. And I think that's the key bit that you need to know here. And we should just emphasize before I get started that this, of course, is still a proposal that's being reported on. It's not official yet. And it's also being proposed by people who are not in power just yet. So there are a lot of ifs and buts involved. But the crux of the idea is simply that it uses an act that grants emergency powers to the president when declaring that the country is in a national emergency. Now, if you look at the history of this act, I won't bore you with the politics, but there have been 39 times, more than that, but 39 ongoing national emergencies in the United States. So the verbatim here is that when a country is in a time of crisis, a 1970s oil embargo, for example, a Cold War, a World War I, those are moments in history where the American president has enacted this law. It was then kind of have on the crux of the fact that there are national emergencies at play, national emergencies that have not ended just yet and are ongoing. So the analysis here is that, in theory, this kind of bypasses a lot of the legal jargon and context and long-awaited kind of debate around tariffs through Congress and go straight to Donald Trump so he can enact it on a personal basis.
Who is working on this plan at the moment?
Well, there are three key names that you need to know. And one, of course, is Scott Bessent, the nominee for Treasury Secretary Kevin Hassett, who's expected to be the director of the National Economic Council, and Stephen Moran, nominee to lead the Council of Economic Advisors. So basically, the trifecta of people you need on your side to design some of these, not only tariffs, but sanctions policy as well. And this act also previously has been used by none other than Joe Biden to impose things like sanctions on China, on Russia, on Iran, etc. So that's kind of the context and the legal framework that's being used.
But the key thing is, do we know if President-elect Trump has signed off on it, would sign off on it?
We don't know. And this is the tricky bit, because it introduces a completely different strategy than what Donald Trump has been suggesting. It's one that protects American consumers. It's one that's done gradually. But the flip side of this argument, where it can have a 2 or 5% increase month by month and be gradual, also inhibits the kind of shock factor on a lot of the countries that the tariffs are put on. And that shock factor is almost a leveraging power that one would argue that Donald Trump has. So it's not necessarily clear if this is even something that Donald Trump would agree to. But I think the logic behind it is that inflation and affordability are key voting issues and have been key voting issues in the United States, especially in this last election. One would argue it's one of the reasons why the Democrats lost. It's also one that could alienate the base. So if you see inflation increase under Donald Trump's presidency as a result of the tariffs, it could potentially lose some of the ground that the party has gained.
Because, of course, that's the implication here, is that if this were to transpire and it were to be this gradual ramping up as well, the hope is that that would limit the inflationary impact of these tariffs.
Absolutely. And I think that's probably why, of all people, Scott Bessent is at the helm of this as the Treasury Secretary, kind of towing the same line that Janet Yellen is, almost protecting the American people, looking inward rather than outward. But again, in limiting that impact domestically, you're also limiting the impact internationally. And that's where the unknown is of whether or not Donald Trump would support that.
Yeah, indeed. And just remember Trump floating the idea of 10 to 20% tariffs on all imports during the presidential campaign, 60% or higher for shipments from China. But even month by month, that's a pretty speedy ratcheting up of tariffs. Kriti, thank you for being with us. Bloomberg TV anchor Kriti Gupta.
This story has been moving markets. The dollar's weakened and currencies like the Chinese yuan and Australian dollar have been strengthening after this reporting. Let's get the details now from our markets reporter, Valerie Teitel. Valerie, talk us through what we're seeing in terms of market reaction, perhaps starting with the US side of the equation.
Well, when it comes to US markets, it seems like they welcome this leak on gradual tariffs. We're seeing stocks in the green after having a very, last few sessions of struggling, and the dollar is softening. So in some way, maybe they are welcoming this report on gradual tariffs. But, I want to echo Gupta was just talking, that does really pose a few more questions, rather than answers. I want to point out the effect that we're seeing in Asia markets. We're seeing Chinese equities really jumping this morning. And that could be perhaps because if you view this article or this scoop from Bloomberg in relation to China, it could be seen as quite dovish on the tariff front. This article is talking about a 2 to 5% increase on tariffs. We were promised a multiple of 20% from the Trump administration in the run-up to the election when it comes to tariffs on China. So perhaps it's dovish on China, but hawkish on the rest of the world. Maybe that's one conclusion. Another conclusion the market could start talking about is, frankly, discussions are still ongoing. We're, less than a week away from Inauguration Day. There clearly is no plan. Maybe that is, dovish overall, that there isn't hard and fast out of the gate tariffs looking to be proposed on day one. And lastly, maybe we just totally discount this because it has not been put to Trump. Trump, hasn't seen it. Does he support it? We don't know. So a lot of questions, again, on the back of this Bloomberg scoop that they're looking at gradually implementing tariffs month by month. But it seems like broadly the market's welcoming it this morning if you look at what's going on in S&P futures.
Yeah, of course. And there's been such a great deal of concern around tariff increases, including for the likes of the IMF's Kristalina Georgieva talking about the tariff threat driving up long-term borrowing costs and obviously already being a concern for markets because it's such an unknown. Look, a weaker dollar is also an issue from the UK perspective. The UK's been at the centre of, the bond market difficulties, certainly. A weaker dollar would ease some of the pressure for the UK. The Chancellor is going to be speaking to MPs today. How much... what hope do we have for the gilt auction today? How easy or difficult is it going to be?
Well, we could talk about, let's talk about the UK's situation in guise of the US dollar. We have had lots of data and lots of analysis talking about these overly stretched longs in dollar positioning. If we get closer to Inauguration Day and it seems like that the tariff situation isn't going to be as bad as feared, we could see a big reversal in dollar strength, which would very much help the situation, calm the situation here in the UK, for some time. If you look at how much the dollar has moved since the Trump trade began back in September, it's strengthened over 8%, just in a quarter, which is, that's a fundamental, market shift, a market narrative shift here that we're witnessing. If we do see most of that reverse, when it turns out maybe there isn't a full plan on how to go about tariffs, that would definitely give some room for the gilt market to find some calm, for the cable cross with U.S. sterling to also find some calm, maybe give the UK government here some breathing room.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.